There is a theft happening right now in your bank account, in your payslip, and in every single financial decision you make without the knowledge to make it correctly. The thieves are completely invisible because they operate in the dark space between what you know and what you should have been taught. In the UK, the average bloke loses nearly £1,000 every single year due to a simple lack of financial knowledge. Overdraft fees, high interest credit cards, missed investment returns, and subscription traps you forgot to cancel. Think about what that actually means over a lifetime behind the wheel. £1,000 a year for 40 working years is 40 grand in cash. But the real cost is exponentially higher because that same money, properly invested at a modest 8% return, would have compounded into over £270,000 by the time you retire. That is the absolute difference between retiring at 62 and having to work until you are 70, dragging your bad back in and out of an artic cab. That is 8 years of retirement income gone simply because the information was never delivered to you. The people who benefit from your ignorance have zero incentive to educate you. Credit card companies profit when you do not understand how compound interest works against you. Banks profit when you leave your hard-earned wages in accounts earning a fraction of a percent while they lend it out at 20 times that rate. The entire financial services industry has been built on the foundation of your confusion. But the knowledge that would eliminate that stress is straightforward, accessible, and completely clean. Before you can make any real progress on the tarmac, you need to know exactly where you stand right now. Most people skip this step entirely because they have a vague sense that things are okay or bad without ever quantifying what those words actually mean in pounds and pence. Three numbers should live in your head at all times: your net income per year, your expenses per year, and your income surplus or deficit D. Why yearly instead of monthly? Because a yearly view captures the real world. It captures the MOT, the insurance premiums you pay quarterly, the Christmas presents, the lorry park fees, and the annual subscriptions you forget about until they hit your card. Your net income is the money that actually lands in your account after tax and national insurance. Your yearly expenses are what you actually spend, not what you think you spend. Subtract your expenses from your income. If the number is negative, you are in a deficit, and you are actively destroying your future. If it is positive, that is your surplus. And this is the only number that determines your freedom. Your income, as important as it is, only buys your lifestyle. Your surplus is what buys your freedom. The bigger the gap between your income and your expenses, the faster everything happens. A driver pulling in 60 grand a year who spends 60 grand is no closer to freedom than a lad earning 30 grand who manages to save 5. In fact, the high earner is often in a worse position because his expensive lifestyle has created golden handcuffs. Your net worth is the ultimate measure of your life's work. It is everything you own minus everything you owe. Your income is the engine that runs the lorry, but your net worth is the destination. Now let's talk about the force that keeps most of us trapped in the cab: debt. The average household credit card balance in this country is massive. At current interest rates, which often exceed 22%, carrying a balance of a few grand costs you hundreds of pounds a year in pure interest just to stay still. Those monthly payments do not pay down the things you bought. They just cover the privilege of having borrowed the money in the first place. This is because debt compounds against you the exact same way investments compound for you. You have to distinguish between good debt and bad debt. Good debt is money borrowed to buy an asset that will increase your earning potential or appreciate in value, like a mortgage on a reasonably priced home. Bad debt is everything else. It is credit card balances carried month to month, finance deals on cars that are more expensive than you need, and personal loans to fund a lifestyle you cannot afford. If you currently have bad debt, you need a strategy to kill it. You can use the debt avalanche method, where you pay off the highest interest rate first to save the most money. Or you can use the debt snowball method, where you pay off the smallest balance first to get some quick psychological wins. Choose whichever one you will actually stick to, because both are infinitely better than making minimum payments forever. Your credit score is a number that attempts to measure how likely you are to repay borrowed money. The difference between excellent credit and poor credit isn't just whether you get approved for a mortgage, it is what that mortgage will cost you over 30 years. To build a high score, pay every single bill on time, keep your credit card utilization below 30%, and don't apply for new credit cards unless you actually need them. The golden rule of money is simple. Spend less than you earn. Invest the surplus. Avoid debt that doesn't serve you. And let time do the heavy lifting. Knowledge without action is just entertainment, mate. This week, sat in your cab. Calculate your net worth. Track your actual expenses. Set up an automatic transfer to build a 3-month emergency fund. And make sure you are playing offense with your money. The people who build real wealth aren't luckier or smarter than you. They are just more intentional. They build systems that work in their favor, rather than drifting on the defaults of a consumer economy designed to keep them broke. You now understand the rules of the game. You have the framework, and you know what conscious financial choices look like. Stop letting your hard-earned money slip through the cracks of the floorboards. If this bit of real talk helped you see the road ahead, drop a like on the video. It helps the message reach the drivers who are tired of running on the financial treadmill. Subscribe for more honest tales from the tarmac and proper financial literacy. And let me know in the comments. What is the very first step you are going to take this week to secure your firewall? Stay disciplined, watch your surplus, and keep the shiny side up. Over and out.